Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. A late sell-off on Dalal Street. The Nifty drops below 26,000, ending at the low point of the day. The Sensex loses over 440 points. Mid-caps continue to come under pressure. India's new labour code makes minimum wage a universal right for every worker. The central government will fix the floor wage, which may differ across geographies but allows states to fix the minimum wage, mandates gratuity for fixed-term employees after they complete a year. Trade unions call the codes a deceptive fraud and announce nationwide protests. Real estate companies could see labour costs increase by 10 to 15% due to the new labour codes. Gig workers get legal recognition and platform companies could see limited short-term financial impact. 50 lakh IT sector employees likely to see a reduction to their in-hand salary, but cost to companies remains unchanged. Hindustan Aeronautics calls the Tejas fighter jet crash in Dubai on Friday an isolated occurrence arising out of exceptional circumstances, says it would have no impact on the company's business operations or financial performance or future deliveries. The stock falls up to 9% in trade before recovering. 40% GST rate will deter Royal Enfield from investing in bigger motorcycles, as the company's CEO Govind Rajan plans to adopt a startup mentality to minimize the GST impact, doubles down on exports and plans to ramp up capacity. That's an exclusive. After 6 quarters of margin expansion, Tech Mahindra CEO Mohit Joshi expects business transformation to be completed in FY27, puts the spotlight on profitability, delivery optimization and scaling of AI services. The US and Ukraine update the framework to end the war with Russia after talks in Geneva. Zelensky says conceding territory to Russia is the main problem, but promises to work with the US on compromises that strengthen the country. President Trump's Department of Government Efficiency, Doge, has disbanded with 8 months left to its mandate. Elon Musk led the initiative in the first few months after it was launched with much fanfare to slash the size of the government. Justice Surya Kant takes oath as the 53rd Chief Justice of India. He will have a tenure of 14 months, promises to focus on reducing the pendency of cases. The Indian Navy commissions INSMahe, built by Cochin Shipyard. The ship is designed to hunt submarines, conduct coastal patrols and secure vital maritime routes. Legendary film actor Dharmendra dies at 89 after a prolonged illness. With a career spanning 6 decades and a crowd favourite for his debonair appearance, Dharmendra straddled action, comedy and romantic roles with equal ease. He was honoured with the Padma Bhushan in 2012 and also served as a BJP MP for a term. Well, let's start with the day's market action. Dalal Street witnessing an all-round fall in the last hour of trade, with the Nifty slipping below the 26,000 mark. IT and bank stocks supported the market in the first half, but then witnessed a sell-off in the later half of the trading session. So that's the Nifty down 100 points for you, 330 lower on the Sensex. The Nifty Bank closing flat off its intraday highs. The Nifty Mid-Cap Index down by about 200 points, nearly 40 of the Nifty stocks closing in the red today. Nigel standing by now to wrap up the day's trading action. Nigel, pressure in the afternoon.
Well, the Nifty slipped and ended closer to the day's low, a day ahead of the monthly expiry. And there were some jitters that we saw in the headline index itself. But it could be more attributed to the monthly expiry that will play out in tomorrow's trading session. However, the breadth of the market favored the number of stocks that were declining, and there was aggressive selling from the word go itself. And that's what led the broader markets to underperform. The tech index, though, that was the outperformer. Remember, it's underperformed in the last 1 year or so, and there were various brokerage calls coming in from the likes of Motilal Oswal that suggested that the time has come now to get into tech. And some of the stocks reacted quite favorably. And if you look at the Nifty itself, the top winners came in from a mix of tech as well as two-wheeler makers. You had Royal Enfield, in fact, that completed 125 years, and the bulls celebrated in today's trading session. On the flip side, you had high beta. That came in for a bit of a hit. Steel stocks from the Nifty pack did take a hit. JSW Steel, Tata Steel, both of them were under pressure. And select defense names like BEL as well did take a bit of a knock today. The broader market losers, though, included the likes of Saman Capital, post that action on the erstwhile promoters. Last week itself, CG Power, well, that stock got hit after an order was cancelled. And since, high beta took a hit, metals were down. You had a real estate stock like Prestige Estates as well that was under pressure, in today's trading session. Net-net, the month of November, the Indian markets have actually outperformed. However, the breadth of the market has been negative, and that's where you're seeing that the small cap index is down close to around 4%, and that's why portfolios aren't feeling very, very good. So the outlook for the Nifty from here on, well, the US-India trade deal, that's what's awaited. However, till that crucial support zone of 25,500 to 25,800, which is around the 20 DMA, that gets protected, the bulls will feel they're still in the game and they'll attribute today's fall to expiry-related factor out there. The bigger question is, can the broader markets recover? That's something that the street will track very closely.
All right, Nigel, many thanks for joining us. And from the equity action to the currency, the Indian rupee posting its biggest one-day gain in a month today. This as the central bank intervention helped the rupee rebound from the all-time low it hit on Friday. However, the currency is still above the 89 mark against the dollar, so 89.23 is the dollar rupee for you. Now, India's largest commodity exchange, MCX, says it has found the cause of the technical glitch that halted trading for 4 hours on the 28th of October. Speaking to CNBC TV18 exclusively, MCX's CEO Praveena Rai did not reveal what caused the glitch, though. She said the exchange employed a third party to assess the root cause of the incident, and the whole system was then tested to identify any other potential issues.
First and foremost was the root cause analysis that got done immediately. I think by within a day or two, we knew what it was, and we communicated that as well. In addition to that, we've also gone to market and we've brought in a third-party assessment of the root cause, so that in case there's something getting missed internally, it gets picked up. So that is also completed. The next step is to say, hey, this is looking at the root cause, but why don't we actually put the whole system through a testing so that with real volumes, we are able to identify any other such threshold parameters. So that's something that is currently in process.
Well, that's MCX, and S&P Global Ratings has forecast that the Indian economy will grow at a rate of 6.5% in FY26 and 6.7% in the next fiscal. In its latest economic outlook, the rating firm has said the GST rate rationalization and easing monetary policy will drive consumption-led growth. The report also states that domestic demand continues to support growth, even though US tariffs have impacted exports. Now, Hindustan Aeronautics shares dropped after a Tejas fighter jet crashed during a Dubai air show on Friday. The Indian Air Force pilot wing commander Naman Sayal was killed in that crash. HAL has called the incident an isolated occurrence arising out of exceptional circumstances. In a statement, the company said the incident will not impact the company's financial performance or future deliveries. The big story this evening, India has a new labour law regime in place. 29 colonial-era laws have now been repealed or rationalized into 4 new labour codes. The stated aim is to modernize the legal framework, extend social security to a wider workforce, and ensure universal wage protection. However, trade unions affiliated with opposition parties have announced nationwide protests. So how do the new labour codes change the labour landscape? Let's focus on some of the big changes. First up, the central government will be fixing what it calls, and I quote, the floor wage, taking into account minimum living standards across geographies. States, however, will have the power to fix the minimum wage rate, which shall not be lesser than the floor wage fixed by the centre. So that becomes the floor. States can do more than that, but not lower than that if they like. Second, this has been a major bone of contention for trade unions. The law gives smaller companies more flexibility when it comes to laying off workers. Companies that employ more than 100 people needed government approval before laying people off. That threshold has now been increased to companies that employ over 300 people. Number 3, the gratuity eligibility timeline has been eased as well. Fixed-term employees who've completed a year of continuous service are eligible for gratuity. Earlier, the provision mandated 5 years of service. And lastly, the new code gives gig workers, people who work for the likes of Zomato, Swiggy, etc., legal recognition. This had been a long-standing industry demand. Platform companies could, however, see short-term financial impact on account of it. Let's now bring you a sector-by-sector analysis of the new codes. My colleagues are standing by, Reema, Shilpa and Sonal here with us to decode what the new labour codes mean for different sectors. Sonal, to you first. Real estate is a labour-intensive sector. How is the real estate sector reading into these developments? What is the likely impact?
That's right, there will be an impact on real estate industry and buyers as well because of changes that we are seeing in the labour laws. Now do remember, labour costs are different for different cities. For something like a Mumbai, we have more percentage going to land costs in the total developmental cost versus a city like Hyderabad where labour costs will be higher. On an average, labour costs are anywhere between 15 to 30% of the total developmental cost for a real estate builder. And also if we talk about cost X of land, it is anywhere between 20 to 25% of the total total construction costs. Now, what would the impact be of these changes? Now, we spoke to Anirog. They indicated that labor costs would increase by 10 to 15% due to these new laws, and of the total developmental costs, it would mean an increase of 3 to 4%. Would the developers be able to absorb that? Not really, because their balance sheets are very stretched currently, and they will not take it on their P&L as well. And these costs will be passed on to the buyers, so there could be an impact of 3 to 4% on buyers' buying costs as well. We also spoke to Knight Frank, and they said that shortage of labor has been a serious issue in the real estate industry, and if these labor laws are implemented, there could be a massive shift. The labor shortage could not be an issue anymore, and it will be solved for this industry. However, he did indicate that yes, this implementation by builders could take more than a year, and to formalize this process as well completely. So this could be the impact of these new labor laws on the real estate industry, ultimately coming down to the buyer cost as well.
Well, that's right, Sonu. Let's bring in Shilpa now with what these rules mean for India's gig economy. Shilpa, what does it mean for platforms like Eternal, Swiggy, etc., and those who are employed by them?
Well, you know, these new labor codes, for the first time, they give all those who deliver our food, our online orders, and drive our cabs a formal worker status. Now, a gig worker has been defined for the first time as anyone working outside a traditional employer-employee setup, and a platform worker is someone who provides a service via an online app. Now, formally coming under the Code of Social Security, gig and platform workers will get life, accidental, and disability insurance, health cover, and maternity benefits, old age protection or pension, and a lot more. Now, they will also receive an Aadhaar-linked universal account number, which will allow them to access welfare benefits irrespective of which state they are in, removing the issue of migration as well. Now, a dedicated social security fund that will be financed by the governments, platform companies, and CSR contributions will be supporting these schemes. Now, this brings in a big change for platforms with a mandatory contribution of 1 to 2% of their annual turnover to the Social Security Fund, and it's capped at 5% of payouts that are made to these workers. Now, analysts estimate that this could increase costs for the like of Swiggy and Eternal by anywhere between 2 to 3 rupees per order, with an incremental burden of about 150 to 200 crores on their GMV. Now, Eternal and Swiggy already provide benefits worth around 1% of their revenue. Now, from Swiggy to Eternal to Uber, Amazon, others, all of them have welcomed these changes. Both Swiggy and Eternal say that they don't expect any material long-term financial impact and are strengthening their internal systems for compliance. Online shopping apps like Amazon and Flipkart are also evaluating changes required, and all these companies are engaging with the government as the final rules are drafted. Now, remember, what are all these companies? It covers all the major platforms: Swiggy, Eternal, Zepto, Amazon, Flipkart, Urban Company, Ola, Uber, Rapido, every other online ordering platform that you and I use. Now, analysts expect that these companies will pass on most or all of the cost to us consumers because they're already working with very stretched, thin margins. So this could mean a slight 2 to 3% increase per online order that we make, and this will likely be added to an existing platform or handling or convenience fee going forward. But this will go towards giving a much needed social security benefits to the 40 crore plus gig workers that we depend on almost every day. Back to you.
Well, it is a large number and the gig economy is growing. Thanks very much, Shilpa, for joining us. And let's go across to Rima now and what these codes could mean for the IT sector. Rima, you've been speaking with companies. What's the likely impact?
Thanks so much for that. So the overall impact on the IT industry is not expected to be material. Now, even though the IT industry is one of the largest employers of the formalized workforce, more than 5 million people are employed in the IT and IT-enabled services, which includes BPO, and a large chunk of the IT services expenses, some estimate 75%, some go as high as 85%, is on account of the wage bill. But the overall impact is not expected to be material. Where the costs could go up, perhaps is on account of this mandatory health checkup for employees above 40. Because IT companies, some of these legacy old companies would have a sizable number of employees above the age of 40. But that other big change, where there is a mandatory PF-linked basic pay increase to 50%, is not going to impact the IT companies, because while it may reduce the in-hand amount for the employees, the overall cost to the company remains unchanged. So for a company, the CTC is not going to change. It's just the composition of the basic pay versus other allowances will change. So for an IT company, there is no impact on account of the basic pay increasing to 50%, unless they say that, okay, you know, the company, the employees are going to get less money in their hand, and therefore we'll increase the overall CTC. And there could be a minor increase in the cost on account of the overall compliance burden, etc.
Okay, Reema, many thanks. So, sectoral analysis of what the labour codes could mean for employers and employees. Meanwhile, trade unions affiliated with opposition parties have criticised the notification of the 4 labour codes. In a statement, 10 central trade unions and various independent federations have called the move a deceptive fraud committed against India's working people. The unions have called for a nationwide protest on Wednesday and called on all members to wear black badges to their workplaces. On to a CNBC TV18 exclusive. Royal Enfield plans to launch its first electric motorcycle by April next year. Parikshit Luthra caught up with the company's CEO B. Govindrajan on the streets of Goa to take stock of the brand's 125-year-old legacy and its future plans. Govindrajan said the 40% GST rate will deter Royal Enfield from investing in bigger motorcycles. He also said the bike maker plans to adopt a startup mentality to minimize the GST impact while it doubles down on exports.
The higher CC motorcycles, the era is slightly going off. I don't think people are really enjoying. If given a chance, even I won't enjoy that sort of a bigger motorcycles. And I want a motorcycle which has to be interacting with me. And I control the motorcycle and I enjoy the motorcycle. And that's why we said middleweight, Rashid, is what we will focus as a company. And the middleweight, our definition is 250cc to 750cc motorcycle. And currently we have 350cc, 450cc, 650cc platform. And I do believe strongly that even this market can grow because premiumization in India is the thing. And we are by far the motorcycles which is very accessible price point which we have brought in, and gorgeous looking motorcycles, and everybody is loving. And I do see there is a good growth even in this platform which we can bring in for future.
Well, that's Royal Enfield on their launch plans. Here's another exclusive this evening. After 6 quarters of margin expansion, Tech Mahindra CEO Mohit Joshi expects business transformation to be completed in FY27. This as the heads of 14 group companies came together on television for the first time at their annual Investor Day. Speaking to CNBC TV18, Joshi also said the company will prioritize profitability, delivery optimization and scaling of AI services. Take a look.
Very confident, and we're completely committed to our F27 goals, and then beyond that, we'll sketch out a vision for for the next 3 years.
Yeah, so give us a glimpse of what the vision for the next 3 years could potentially look like.
I left my crystal ball at home, unfortunately.
You don't need a crystal ball. I'm sure you've got a vision board that sets out those numbers for you. But Mohit,
I'm not going to. So look, I think the thing is right that I don't want to start manifesting my FY30 vision over here, but. I do feel that, look, the first part of the journey has been about becoming world-class, right? Really a catch-up with the peers in terms of growth, in terms of margins, in terms of deep capability, while building on the strengths of the company. FY30 is going to be about becoming world-beating, right? How do we figure out what are the things that we do exceptionally well, and how does that start to show up in our financial results?
Well, that's Tech Mahindra, and time for us to take a break. But up next, India and Israel are set to fast-track the first phase of a free trade agreement. Commerce Minister Piyush Goyal has said both countries have agreed to focus on getting sensitive issues off the table. That and more when we return. Prime Minister Modi met Canadian Prime Minister Mark Carney on the sidelines of the G20 Leaders Summit in South Africa. Both leaders have agreed to formally launch negotiations for a comprehensive economic partnership agreement. This agreement will include goods, services, investment, agriculture and digital trade. Modi and Carney expressed confidence that the agreement will help more than double bilateral trade between the two countries to $70 billion by 2030. Commerce Minister Piyush Goyal is upbeat about a trade deal with Israel. The minister is in Tel Aviv, where both nations agreed to the framework based on which the negotiations will be held. Speaking to our colleague Abhimanyu Sharma, Goyal said the discussions will focus on increasing investment, R&D and partnership in the agriculture sector. Take a look.
Yesterday, I had very extensive discussions with my counterpart, the Honourable Commerce and Industry Minister. And we have both agreed that we will focus on low-hanging fruits, get the sensitive issues off the table on both sides, look at how innovation and R&D can drive greater investments in each other's countries, work at joint projects where we can leverage on their skill sets, they can leverage on the economies of scale that a large market like India gives, whether we can do infrastructure projects or provide them youthful, skilled and talented manpower to support the Israeli economy. So it's a very multifaceted partnership that we are crafting with Israel. And it's quite possible that we may come out with a first phase of an FTA so that we can kickstart the benefits faster.
Are there any actionable insights from the meetings which you had with several leaders and the meetings you are slated to have with several leaders? Any targets being looked at with respect to mutual investment opportunities and with respect to other opportunities with respect to manufacturing?
Well, I've met their finance minister and we are looking at a joint protocol which will help encourage import and export of goods and services from each other's countries. I've had very good meetings with the agriculture minister, who's a very, very good friend of India and is looking to expand relations on the agri field with India. I'll be meeting their senior leaders tomorrow to further discuss how this partnership can be taken to the next level. All in all, I think the country, the people of Israel have showered a lot of respect on the entire business delegation that came with me, and I see tremendous potential in this partnership going forward.
So a final question. Now, several FTAs India has already signed with developed economies. Are they going to serve as a template for future FTA negotiations? Because as you indicated earlier too, several red lines cannot be crossed. So all FTAs which are being negotiated with different economies, be it the US, the EU, or even the Mercosur for that matter, or GCC, what kind of targets can be looked at? What kind of timelines can be looked at in near future?
Well, there are always red lines, there are always sensitive issues, but every agreement stands on its own ground. Every agreement has its own positives, benefits, and you really create a balance at the aggregate, considering all aspects of a relationship. Keeping that in mind, we decide what would be included in an FTA, what would not be included. What may be sensitive for one country may not be sensitive in another country. There are many products that are desirable for us to have in India at low cost for our own economic growth and development. So it's on a case-to-case basis. You have to decide what you will open up and what you will not.
Well, that's Commerce Minister Piyush Goyal in Israel. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV18. Stay tuned. We're back in a minute with more.